Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. And before we hop into these charts, guys, I just want to wish everyone a Merry Christmas and Happy Holidays. If you don't happen to celebrate Christmas, I hope you have a great day. And I hope as we're coming into the end of this year, you've had a great year and we have a better one next year. So, further ado, let's just get right on into the charts, not waste too much time. So we're going to start off looking at the Dixie, see how we've kind of played out over these last week or two. And as you can see, we've broken down just a bit more, but notice that we're starting to show some signs of slowing down the selling here, okay? So in the last recap, I had said we are likely going to get a higher low forming here, whether it's where we're at now, maybe it's even slightly lower, but really this low right here is the one that we're likely going to see protected, at least for a time. Now, this doesn't mean that we're going to make a higher low here and just fly all the way up. I do think that's definitely a very realistic possibility, but at the worst, from the weakest perspective of the dollar, we could just see a larger consolidation where we kind of go into a squeeze structure over a long period of time. So we're talking about maybe a couple of weeks to maybe even a couple of months, depending on how drawn out this ends up being for the dollar. Okay, so we're still in that same sort of characterization for the dollar, in my opinion, where I'll be looking for a higher low, and then we'll have to wait and see some evidence if we're going to continue higher to go after, the buy side here, and then eventually go and maybe tap 109, 110, or maybe we'll just go into a larger consolidation that ends up kind of squeezing out kind of like this. Okay, so we'll just give it time. Overall, it's been fairly under a under a reasonable lens. It's been pretty reasonable. The dollar hasn't been going too crazy in either direction as of late. Okay, so let's just go over to the Dow now. So we're going to talk about the U.S. indexes. So the Dow obviously broke through the all-time high, and we've made a new all-time high here, which is extremely impressive. Very shocking if you look at it from the perspective, if you thought it was maybe going to be a bear market rally, kind of down here. I was definitely in that camp for a while, but if you happen to have been long like we are in the lemon garden on a majority of our positions, then well, we're sitting pretty pretty comfy right now. It's been pretty great. But as we've taken out this high, I've been waiting to see any major signs of weakness. Now we did get one sign of weakness here, which is pretty clearly visible, is this bearish engulfing daily candle. However, don't be fooled. This doesn't mean that we've topped out and we're actually going to break down lower and go after the lows. It's not like this actually implies a swing failure pattern has occurred here. Like I've said, we have to hop up to the monthly chart. Let's go to the monthly and take a look at this. This monthly chart does not imply some sort of swing failure pattern is in the cards. It's possible, of course, it always is. But this monthly chart seems very healthy, coming out of consolidation, impulsive move outside of this consolidation, and then continuation, and now looking to hold above this previous all-time high here for the month. And we have about 5 days left, give or take. So if we close this monthly candle above that high, above the previous all-time high, there's a really good chance that we'll just have continuation over next month and maybe even the month after that. So I would say be very careful getting too bearish. If you go on to the weekly here, we did have a doji here, so we may get maybe over this coming week some selling to come back towards the previous all-time high at about 36,971 to test that level. But as long as the monthly candle closes above it, that will imply extreme impulsiveness to the upside on the monthly. Now, let's just say it doesn't close. Let's say price breaks up as it has and then breaks down under that level, and we close the monthly chart under this level. Now, what would end up happening is not that, the month it's going to fail, we're going to break down hard. It will definitely kill the impulsiveness of this move that's potentially gearing up for maybe a candle more or two upside on the monthly. But what it would open up, again, potentially, it's not like high probabilities right now. If we were to sell down over the next 4 days, give or take, and close under that high, it will imply potentially a deeper pullback coming, and depending on the characteristics of that, we could actually see a failure. Now, the probabilities are not on that side of the market. I want to make that extremely clear. The market is not bearish as of now. It gives no implications of being bearish as of now. So be very careful if you try and swing for that outcome. In my opinion, if you're not long already, you should be looking for continuation patterns, continuation structures to get long over, over time, slowly, obviously with risk aversion in the front of your head. Okay, you don't want to be just willy-nilly throwing your money everywhere. You do want to be very careful on how you get into positions and at what size. Obviously, if you need help with that, or you're interested in kind of getting deeper into that, which is pretty much the cornerstone of all profitable trading, join the Discord. You'll find the link down below with a ton of free stuff that you can look into that might help you out. I do free streams in there, and obviously I offer services like tutoring services, swing trade services, and you can find the links to that in the description below. So this daily candle here, this bearish engulfing here, does imply a consolidation is likely going to come for a time, okay? But likely, if we're going to have demand here at the all-time high, which I would expect the previous all-time high, we will see the consolidation either come back to this level and hold this area, so get pretty tight, very tight, and then leave for continuation, or we're going to get maybe a tap down and then continuation higher like this, pop down, and then pop up like that over the next 4 days, give or take. So I would be very, very skeptical of something like this, okay? And then closing like that. It can happen. It's obviously possible. It's just not what's probable. We always want to err on the side of what's probable. All right, so next let's take a look at the NASDAQ. Sorry, the S&P. My apologies. The S&P has yet to take its all-time high, which is pretty interesting, but not that crazy either. The S&P relative to the Dow and the NASDAQ was the farthest away from its all-time high. It had the deepest pullback. Or I should say it had a deep pullback, but had one of the weaker, probably the weakest pullback up towards the level. NASDAQ had the deepest pullback percentage-wise, but also had the strongest move back up from the correction. So the S&P is approaching it. I do think, obviously, it will eventually take it because the Dow and the NASDAQ, as we'll see, is still implying bullishness, and so is the S&P. So if we look at the daily, yes, it did take out the 1 week bearish order block. We did have that bearish engulfing, just like on the Dow. So this implies consolidation, maybe even a slight pullback. But if we go up to like the weekly and monthly, unlike the Dow, not a doji, clearly closed above last week's high. So that's very bullish. It's very positive. And if we go to the monthly, same as the Dow, implying continuation, no signs of weakness, and there's only 4 days left. So if we're going to get bearish on the monthly charts for both of them, all of them really, that is going to be a lot of bearishness this coming week then, right? So that's why the implications are not really on the side. The probabilities are not really on the side of major bearishness coming at any time, okay? So just keep your eye on the charts. Obviously, always stay vigilant. But as of right now, the best thing, the highest probability to kind of like look towards what's going to occur is likely a consolidation, but the consolidation is likely going to have a quite bullish bias to it, okay? Next is the NASDAQ, and NASDAQ has also taken its all-time high. Now it's trading directly on top of it or slightly on it, slightly above it. So it's far less decisive as the Dow, but like I said, NASDAQ had the deepest pullback percentage-wise of the three, and it also had the strongest pull-up of the three, right? So this is very impressive, and it's not that out of common because, hey, NASDAQ is going to be the most impulsive because of just what's in it. It's mostly tech, right? So it's going to be a very impulsive index. But if we look at this closely, the NASDAQ and the S&P, unlike the Dow, are far less bearish in the short term, okay? So the Dow's not really that bearish in the short term, but relative to the two of them, the S&P and NASDAQ, it's the most bearish of the three. If we go up to the weekly, take a look at this. See, notice how the weeklies on the NASDAQ here and the S&P both decisively closed above their previous week's high. But if we go down to the Dow, it closed right under it. So it dojied out, right? So this is very interesting because the impulsiveness on the risk-on assets are still in play, it seems, okay? Dow's going to definitely lean more towards risk-off, staples, sort of. It doesn't have an index that's going to be as impulsive as, obviously, the S&P, and definitely not as much as the NASDAQ. But it's interesting because we're seeing that risk going into the markets still decisively in both S&P and NASDAQ, and especially the NASDAQ as this one unlike the S&P, already took out its high. If we go to the monthly, same old story, and this one's even stronger relative to the other ones, even stronger monthly candles from the NASDAQ. So I gotta tell you, I think it's very dangerous to play bearish, personally. I don't think there's much money in it currently. Okay, we have to kind of wait for the charts to prove it to you. And obviously, if you're not long, I wouldn't panic too much. You know, there will be opportunities for specific plays to where you can get continuation entries, and I would kind of focus on that. Okay, obviously, join the Discord because that's what I'll be doing, you know, going forward. So if you want any help getting into swings or just in any trades, give or take, you know, you'll find answers on the Discord, and obviously we do a lot of free trades too. You'll get a bunch of trades on the Discord. So, you know, come on in. But yeah, so we're looking really good on the US indexes. I see no changes from the last recap. Everything seems like it wants to just continue higher. At worst, we're likely going to see a consolidation between all three of them. And the consolidation, I would suggest currently is going to be fairly tight and fairly short, especially on the Dow. Okay, so let's go over to oil. Let's talk about oil. So oil, again, very similar to the dollar. Big pullback, right? Big pullback, but it's coming into the protected lows, or at least the zone of the protected lows. So specifically this area down here, right? We want to see this area hold. And ultimately 62.56 is the main area you want to see hold, this whole blue zone. And right now, as I mentioned in the last recap, we're likely going to see the selling slow down in here and then ultimately end up going sideways for a period of time. We'll have to wait and see the nature of that consolidation to kind of dictate to us what the probabilities will lean towards. Will this higher low from these lows down here lead towards continuation, or will it lead towards a more bearish consolidation that actually will eventually lead towards more downside? And that's a possibility for the dollar as well. And in my opinion, you know, the dollar and oil are always kind of bound together, at least currently. So whatever the one does, the other's likely going to kind of rhyme with. So we'll keep our eye on both, but the dollar will lead the way. And currently the dollar is likely going to make that higher low and see some upside. You'll probably see oil do the same. They both came into their, you know, to major support zones at this point, or demand zones, whatever you want to call it. That's what these blue zones are on both the Dixie chart and the oil chart. So again, just pretty much, I would say, look for higher highs, higher highs from these intermediate lower highs here. Okay, I would look for a move back towards 80, maybe even 86, 85, that area, and then we'll see if we're going to come back down to make a tightening structure, kind of like this. Okay, over a period of time where we're kind of just tightening out, which could be occurring on the dollar as well. They will mirror each other most likely, outside of any major news or anything like that. Okay, so oil, same old story. Just watch it in the blue zone. It's likely going to kind of sit here and trade through here for quite some time. And not to mention, we're going into the election year, right? So 2024 is going to be the election year in the U.S. Usually there's a push to try and keep oil prices as low as they possibly can, or at least as stable as possible for the incumbent. So if that's going to be the case, again, another piece of evidence where it's likely going to kind of be a very chill time for oil for a period of time. In my opinion, if you've been listening to me, you know that I'm very, very bullish on oil. When we look more macro, more long term, I think oil is going to go to much higher prices. And I don't say that lightly, and I don't even say that with want. So, obviously higher oil prices means higher cost of living. And for a lot of people, that's going to be a real detriment to their life for a long period of time. So I don't say it lightly, but I also obviously have to call it the way I see it as well. All right, so let's go over to gold and silver finally, see how they're doing. So what a time it's been in gold. I mean, it's been pretty impressive. But it's, like I said in the last recap, it had a very interesting rejection candle. But we're already pulling back up. But like I've said, we're going to trade within this candle for some time. And pretty much anything in here is not to be really trusted. You kind of going to have to wait and see if this can get this high wick can end up getting taken out and lead towards bullish continuation. Outside of that, we're likely to consolidate. And the best thing you could hope for if you're bullish on gold is that the consolidation has a bull bias. So either a symmetrical squeeze kind of like this would be okay. That would be okay. Or what I would prefer is from the rejection candle, we start actually descending down kind of like this. grinding lower back towards like 1930, seeing something like that and really kind of mirroring this behavior right here. So big rejection down over here and then kind of breaking down and then having a kind of a move like this, that would be very, very strong and would likely lead easily towards major continuation going back above 2100, maybe even going towards like 2200. So that's what I would want to see ideally if I was bullish on gold currently. But if you're bearish, all you want to see is essentially a lower high from here, which this is likely going to happen, and then straight up continuation lower, and coming back down towards sub 1900. Sub 1900, it's not like it's a bad thing, but what will end up happening is you're either going to build out a much larger topping structure potentially, or you're likely going to actually go after the sell side under here and then essentially look for a macro lower high, which then that could open the door to some serious bearishness. But like I said, it's very unlikely right now. The probabilities are definitely not on the side of that. They're definitely on the side of currently of a more neutral consolidation happening here. And because we popped up and taken the all-time high or the previous all-time high here, the context is going to be more bullish than bearish. So even though this will be more neutral in a vacuum as a structure, the context around it's more bullish. So I would look for something like this to be occurring over time. If we were to have the dollar just pop up like this, that would be actually quite surprising. And if that were to happen, then we're likely seeing a major slap in dollar, much more weakness than expected. And obviously, it could also be paired with much more fear in the world. We would have to wait and see what's the ramifications of that. Foreign for the goal to just do something like this. So this is unlikely. It's almost as unlikely as gold doing this, okay, and just coming straight down. The odds of a consolidation are significantly higher. Now all we need to do is be patient and wait and see what kind of consolidation is going to get built, and then that will give us a really good opportunity to see what the probabilities are in either direction from there. All right, next is silver. So silver, again, very similar in that it's in a much more neutral kind of situation here, but this is mainly because it's so tied to gold, and it has not taken its all-time highs. It's not going to for quite some time. Like I said in the previous recap, I think gold's gonna have to rocket really hard for silver to actually start trading above these areas here, because just the industrial use case, there's just so much more pressure for silver to remain cheap, or as cheap as possible. So I wouldn't be expecting too much out of silver. Now we have broken some key stuff, key levels. We broke these high pivots, so this was a really nice move up, and we even came and tapped this consolidation area. The key is though, now off of the breakdown, will we have a consolidation that leans towards upside, something like this? Okay, or are we going to have something a little bit more neutral that's just going to go straight up sideways? Again, gold is the main implication of this. So what I would suggest is just watch the gold chart, and you're going to see a mirroring in the silver chart. So yeah, other than that, the structure in a vacuum when I look at silver is far less impulsive, far less bullish, to be honest, than gold. The silver is far more range bound comparatively to gold, but again, if gold starts to fly up or even fly down, then silver will ultimately follow, will ultimately rhyme with it. Okay, so that's all we really need to talk about in regards to those to those commodities. So let's go over to Bitcoin and see what's going on. And I'll also touch on Filecoin. So again, if you're not in the Discord, I try to do free trades. I try to do like maybe one free trade a month. Maybe the trade might last longer than a month because it's swing trades. So we'll see. But Filecoin, I just opened this up today actually. So we'll talk about Filecoin first, and then we'll look at Bitcoin real quick. So I just opened up this, and again, join the Discord if you haven't, if you want access to all the updates on the trade. But yeah, Filecoin, I think it looks really good. Again, it's unlike many other cryptos, has yet to actually break its structure. So this is still within a very large structure, weekly structure here. And if we go by the context of what's happening with the market and even with Filecoin's chart, even though this is a more neutral structure, it has more of a bull bias to it. So the probabilities are on our side that we will likely see more upside and ultimately come back towards maybe this consolidation here. So this key monthly area I have, and then maybe even towards the monthly bearish fair value gaps up towards these imbalances up here. So, you know, I really like the opportunity I'm seeing here, and obviously I took the trade. So this is one of the free trades I have recently taken. And so far we'll see how it kind of plays out. Obviously, if you don't know me, I tend to do small positions and then I build on them. So I'm someone who does, for swing trades specifically, I like to pyramid, but you know, reverse pyramid into them, and that I like to build into drawdown. I have a key failure zone. Okay, it's not, you don't just buy to buy for that sake, but I look for key levels for it to come back to where, you know, start with 1% and then maybe do another 1%, another key level, and then if it comes lower, do another 1% or 2%, and then ultimately have like a ceiling to how big the position is going to be, and then to where the failure point will be to get out of the trade. So that's how I tend to like to do my swing trades. It tends to be very consistent and safe. Obviously, you have to stay very disciplined. You don't want to just throw your whole account all these trades. You have to keep keep the limits very clear on every trade. You know, it's been very successful thus far. We've been going for almost 2 years, and it's been extremely successful, I would say, actually, on the crypto side for sure. So Filecoin looking great. We'll see if we end up getting a break from this structure or if we're going to continue to kind of trade within it. Either way, we do have the probabilities on our side for now. So I am very comfortable with us trading within here. And like I just mentioned, many coins have already broken these weekly structures. We'll look at a couple of them. Filecoin's yet to. So whenever this does, you know, should it do it, I think it will perform extremely well. So I'm very excited to see what Filecoin has in store. So let's go over to Bitcoin and talk about Bitcoin here. Bitcoin's been very interesting, right? So Bitcoin's been very, very interesting. And I dare say the bears have probably been having a horrible time dealing with Bitcoin, to be fair. And if you're looking at this and wondering what these are, so these are, you know, again, these are Bitcoin was part of the premium trades for the premium members. These are levels where I took percentages off. So we took 50% off here and then another 50% off here. And now we're running with about like 25% of the original position. And that's how I like to do it. I like to slowly kind of get into trades, and then I like to slowly get out of trades to try and capture as much of the move as possible. And currently, you know, we're kind of sitting at where we took our last take profit point. And notice what's happening here. We're likely going to kind of squeeze in here for a little bit. Very interesting. We came and are holding this weekly bearish fair value gap. So that's what this red zone is. So this supply area is really failing to lead towards a major breakdown. If we go down to the 4 hour and 1 hour, notice what happened here. You know, we had a nice breakdown here. This was actually what you wanted to see from a bear's perspective, right? You want this supply zone, this bearish zone, to create a pre-decisive move down and then lead towards a lower high from this move up, right? So this was already very interesting. This was what you wanted to see. You took out an intermediate low, so that's great. You didn't take out a protected low, okay? So the protected low is down here on the 4 hour, but at least you started the process of creating a topping structure on the 4 hours, what you wanted to see. However, and I had mentioned this to one of the members, you know, seeing this behavior here, okay? So big move down, and then we already start seeing this grinding structure that then leads towards this sort of move up like this. That's not what you want to see as a bear. You don't want that indecisive action happening in the supply zone where you're going to consolidate in the supply zone or just under it. It's not very good. And then if you look at this, us breaking this lower high here, like this, is super bad for bears because it means that they've already failed at the breaking of this intermediate low. They've already lost, they already lost this week high, right? And now the consolidation, even from this breakdown, is still trading above. So they failed on a lot of counts to get bearishness to come into Bitcoin and stick, you know? So this is not a good sign if you're bearish. And if we go down to the 1 hour here, so let's go down to the 1 hour time frame. Let's take off that doodle here real quick so we get a little cleaner. Maybe, there we go, perfect. Okay, so the 1 hour, take a look at this. So again, you know, when you have a big move up, right? So this is not a huge move up, right? But you have a consolidation, and then watch as you break down. So you break the consolidation. That normally you would expect for continuation. But when you have a retracement back up, and now if we see on this hourly, now it hasn't happened yet, but if we see this hourly candle or next coming hours break through this consolidation, what I'm going to tell you is run if you're bearish, because what's going to end up happening most likely is you're going to start consolidating above these intermediate low highs here and lower highs here, and this consolidation will likely lead towards continuation. So this is really, really bad if you're very bearish. Okay, so this is not a good sign if you want downside. This is more likely trapping more bears in here. And the daily, the longer it trades within here, the way it has, the better it starts to look for a continuation structure where you had big move up, breakdown, pop up, and now consolidation here and continuation. Okay, so you're essentially getting a very small cup and handle sort of structure that's leading towards continuation. If the bears don't essentially get the decisive bearish action that they're looking for. So this is not a good side if you're bearish. Now, if you're bullish like us in the Lemon Garden, if you're in a bunch of longs like we are, then this is a great side. Okay, so that's just how it is. Nothing else to be said. So as long as you're on the right side of the market and you're not off sides, this is great. But if you are bearish, I'm warning you, be very, very careful. Unless the bears can get some serious bearishness, into the market to get stick on Bitcoin, this is not a good sign, in my opinion. Okay, not a good sign at all. And if it does do something like this, where it breaks up, okay, and then comes back down and does something like this and still holds this area, what you're doing is you're repeating this, but on a daily time frame, which this is just a pennant. Okay, so you have these lows like this, and then a flat top essentially. That's also very bullish. So when I say the bears need decisive bearish action to come into Bitcoin and then to stick, we need to see something like this, and we need to see it kind of hold, kind of like how this candle was, but just have continuation beyond it. So Bitcoin, very bullish. If we start breaking this area, we're going towards probably at least 46 to 48,000, and then eventually probably going to get towards the 50. Okay, we're probably going to get towards that bearish monthly fair value gap, and maybe go after the buy side above this pivot here and start tapping into this consolidation here. So we'll end up seeing that if we do continue to hold here. It's gonna be very, very likely. And obviously, if we get there, that'll be a full TP hit. But I probably won't close out the whole position because, well, we might go for the all-time high. I don't know. So I want to make sure we have some exposure. I want to have some exposure, and I want to make sure anyone who's following me in this trade to also have exposure in Bitcoin. So we won't fully close out the position. It's very similar to what happened here with AVAX, right? So AVAX, another trade where it hit the full TP, right? We took off 2 TPs here, similar to Bitcoin, but even though it hit the full move, we're still letting it run, right? So if you're in AVAX with me, you haven't fully closed out, because I haven't fully closed out. We've just taken our profits, and now we've killed the risk, and we're just watching. We're just waiting and seeing what's going to happen, see if we're going to continue higher, or if this is the end. We'll find out, and we'll wait for the markets to tell us to get out. And it's like this for many positions, right? Thankfully, we're starting to find ourselves in this position where many trades are like this, where we got AVAX, we have a whole bunch. I think like ICP is one that's doing really well. IOTA's done really well. So, we just have to be patient and let these things kind of play out. And my advice to everyone is don't be too upset if you're missing stuff or you're not in anything. There's a lot of positions that are yet to actually play out fully, like Filecoin being one. I think ENJ just broke out of its structure on the weekly, right? So it's actually not gone fully out of bounds from there, but it has broken out, right? So it has broken out, but it is still just breaking out. So here you go, right? Still very early, still very, very early. So you're still not out of the consolidation fully, but like I said, there's a lot of opportunities. You just have to kind of expand your time frame a bit. So I wouldn't don't be too married to the smaller time frames. Definitely take a look at the weekly, obviously look at the daily, and maybe even sometimes take a quick peek at the monthly, because there's some big moves coming for a lot of these coins, it seems like, and a lot of them have already played out huge, right? So Algo's another one that was a big move for us, and it's hit the full TP as well. Again, we took our two, we're just letting the rest ride. But again, big move for us. So, we just have to be patient and let these things happen. And there's a good chance that if Bitcoin has continuation, a lot of these altcoins are going to have moves up even more, maybe another 100% potentially, right? So, just guys, be patient. Don't go crazy with the risk. Start small, and you'll find yourself in some really good opportunities. And if you can't do it on your own or anything, come join the Discord. Discord's totally free. There's gonna be plenty of people there from all levels. We got people who put out awesome charts, and obviously I'm pretty active as well, so you can always ask me questions, or I do live streams in the Discord fairly regularly, so you'll always have an opportunity to talk to me if you want. And then if you want to get in deeper, kind of join the services, the swing trade service, you can be in the trades that you're seeing here, that so many other people are in as well. So I think there's a lot of opportunity, whether you want to be within the Lemon Garden or not, or whether you want to be in the services or not. There's a lot of opportunity, but I would say at least join the Discord, because we'd love to have you if you haven't already, and you'll probably find a lot of value, I hope, in that Discord. So yeah, I think that's about it. I've gone over everything I think I need to. So again, if you have any questions, or you actually want to challenge me on anything I've said, or you want to share something, please leave a comment down below. I love reading comments when I get them, and I take every single comment very seriously, especially if it's something that goes against my opinion, because that's all this is, guys. It's just my opinion. I don't have the monopoly on truth. I'm searching for truth just like you. So if you have something that you think is right from your point of view, and I haven't said it, or I disagree with it, let me know, because I'll definitely take a look and see. Maybe you'll change my thinking. Maybe you'll end up being right. So leave a comment down below, and like I said below, before, you can check out the links down below for both the Patreon and Discord. And guys, remember, be patient, be vigilant, and be nimble. I love you guys. Merry Christmas. Bye.